In the last few weeks, we've seen ARK Investment putting lots of funds into a company called Paccar. Their holdings now are $263 million, and it makes up almost 1% of the whole ARKK fund. What's so interesting to them about this stock? Today we're going to take a real brief, kind of quick overview look at the company. Welcome back to the channel, everybody. My name is Trey. Today we're going to be taking a look at Paccar. I have been an electric vehicle lover for a long time. I have one here in Japan, and I've been invested in Tesla since it was 180 pre-split. And I've also been watching a lot of the EV market bubble stuff going on recently. You guys know how I feel about NIO and Chinese stocks in general. We've also seen, Nikola go up and down. Paccar is kind of becoming one of those, and a lot of people are getting really excited about this company. But is it merited? Is it unmerited? Is it just hype like Nikola was? Probably not if ARK is getting this heavily invested in it. So today I wanted to just take a real brief kind of bird's eye view look at the stock before I go in and do a super duper deep analysis of the numbers and figuring out price targets and stuff like that. If you do want me to make a more in-depth video after you watch this one, please let me know down in the comment section and I can work on that for you. Briefly put, Paccar is one of the world's largest commercial vehicle manufacturers, and they're making the transition into electric, fuel cell, hydrogen, autonomous driving, and they've made a bunch of really big power partnerships in the last few months, which are looking very promising going forward. Operating under numerous nameplates, if you've ever driven on the roads in North America, you've probably seen Kenworth or Peterbilt. In Europe, they use DAF. These are the different nameplates that they sell their different trucks under. They operate in more than 100 countries, and they have a dealer network of more than 2,200 locations. Not only do they sell the trucks, but like typical automakers, they also have dealership, they offer financing, parts, maintenance, and all that stuff. By far, the largest part of the revenue is sales, but parts has been growing, financing has been growing, and I wouldn't be surprised once autonomy kicks in if we start to see growing market share too. You may not know this about the North American market, but shipping trucks, freight trucks, are how we move things around by and large. 74% of everything that is moved or shipped uses one of these kinds of trucks at some point in their shipping process, as opposed to rail. I know a lot of Asia and Europe use a lot more rail or pipelines or things like that. It's really interesting as a Tesla fanboy personally to see all of the hype around the Tesla Semi. They're working on a 500-mile Semi, and it's kind of debatable to see when will battery output, battery production be able to become a real thing, to the point that they can make a dent on this huge shipping market in North America. And I think that factor, combined with how quickly Paccar and companies like them can start to implement autonomous driving, will end up shifting the whole entire massive market for shipping trucks going into the coming years. Also wanted to mention that Paccar has been profitable for 81 years straight and has offered a dividend for 80 years straight. The dividend isn't always growing. That's why you might not have heard of them as a dividend aristocrat or anything like that. But last year, even though the revenues were down from the year before, they kept that dividend going, and then they also offered a special 70-cent dividend in January for stockholders last year. They're also really well known when it comes to taking care of the environment, as well as being a really good workplace, positive, safe, healthy workplace for men and women alike. As they show in their investor presentation, they're kind of rebranding themselves into a global technology company in commercial vehicles, rather than just being we're a truck company. They're saying we're a tech company. Check it out. Revenues hit $18.7 billion. with a net income of $1.3 billion. The average dividend yield in 2020 was 2.5%. So we've been looking at a lot of SPACs, special purpose acquisition companies, and there's also been a lot of hype around a lot of really brand new little companies that are just coming out whose valuations go crazy. Paccar's been around for more than 100 years, and they also have huge revenues and a good record of paying out dividends. And so this isn't some risky brand new company. This is a company with a really strong track record. And if they can make this strong shift into EVs, I think they're going to be able to keep going. Interestingly, if you're a motorsports fan, you've probably heard of the track called Pikes Peak. It's a road who peaks at over 14,000 feet in altitude. And if you've ever driven a gasoline car up to high altitude, you know that the performance sucks because the air is so thin and there's not as much oxygen. So electric cars and fuel cell cars do really well in these conditions. Paccar recently sent up their fuel cell trucks up Pikes Peak, and they did just fine. Check it out. They have the Peterbilt 579 EV and the Kenworth T680. These trucks have 470 horsepower and a 350-mile range with only a 15-minute refill time. They're built in collaboration with Kenworth and Toyota North America. My initial thoughts when hearing a 350-mile range was a little bit disappointed, but they're actually positioning these trucks in the market to be kind of like not long-haul trucks, but kind of the last portion of delivery trucks. So maybe it'd be something driving around in the LA area kind of thing versus shipping from, you know, Utah to LA or Colorado to LA or something like that. And compared to a lot of other competition, we actually are seeing these functioning already. Not a lot of companies have semi-trucks, non-gas or non-diesel already on the road. And these are hydrogen fuel cells, so refueling will be quicker than using electric power stations too. Should also mention that they have 60 hybrid or zero emissions vehicles already like in production. You can order a lot of them. They started ordering third quarter 2020, and production will start second quarter of 2021. And in their testing, they've already covered tremendous amounts of miles working on their neural networks for autonomous drivings and things like that. And that's also building up, you know, a service history and figuring out the weaknesses and strengths of the different drivetrains and refueling systems and infrastructure as well. Paccar's also announced a bunch of big partnerships with Amazon-supported Aurora, Uber, NVIDIA, and a few more too, including Faith Technologies, which is working on building a Paccar-specific charging infrastructure from 20 kilowatts all the way up to 350 kilowatts. So once they do get an EV system going, recharging can be pretty quick if you're on a 350 kilowatt charger. Check it out here. They say Paccar and Aurora form strategic partnership to develop autonomous trucks. Aurora is a leader in autonomous driving technology, and through this partnership, the two companies are looking to develop, test, and commercialize autonomous Peterbilt and Kenworth trucks. The goal is to increase efficiency and safety and to be able to start launching in the next several years. Additionally, NVIDIA and Paccar announced their self-driving partnership. You may have seen my NVIDIA videos. If not, click up here to check it out. But NVIDIA is one of the big leaders in self-driving technology. Their data processing power and also neural network systems are some of the best in the world, maybe even on par with Tesla. We'll see how that ends up playing out in the coming years. But in this partnership, they've already shown that they have self-driving trucks. Their aim is to have level 4, which is literally self-driving, coming up relatively quickly. There's no ETA or anything like that. But if this can get going, it's going to be a game changer for the whole industry. Let's take a quick look at some of the financial figures that they've provided in their investor presentation as well. Strong liquidity. They show over the years, over the last 10 years, super strong liquidity, strong cash and marketable securities position with $5 billion as of the end of 2020. No manufacturing debt. That red line on the chart there shows their liquidity reserve always staying at kind of $2 billion across the board. This isn't a company that's risky about taking huge amounts of debt out to start something new. They have really good cash flow. So as cash comes in from operating, they use that to funnel into R&D and to funnel into new products and CapEx and things like that, rather than going out and taking out expensive debt to fund new risky ventures. They have best-in-class operating efficiency. Check it out. They are the green line along the top, which shows versus all their competitors, they're massively or just a little bit more efficient. And they say on the left there, this is a testament to the outstanding performance of Paccar's employees. Next slide, best-in-class operating efficiency. Inventory turns. So that means how quickly inventory is turning around. So for example, if you had a dealership and you bought 10 cars at January, and by the end of the year, you had sold 2 of them, like basically your inventory turned around just a little bit. But if you bought 10 cars at the beginning of January, sold them all, and you had a whole new 10 cars in February, and sold them all and had a whole new 10 cars in March, like that's a really high turnaround rate. So check it out here on this chart. They show you just how fast their turnaround is compared to the competitors. Best-in-class operating efficiency as well. They're way below the competitors, reflecting strong financial discipline. Some of the other highlights for 2020 include 133,300 vehicles delivered worldwide. US and Canada Class 8 retail sales market share is 30%. So US and Canada, 30% of these Class 8 trucks that you see are Paccar trucks. That's like pretty dominating. US and Canada medium duty retail sales market share of 22%. A- rating from the CDP on environmental practices, placing it in the top 15% of companies. Record quarterly Paccar parts revenue in the fourth quarter of $1 billion, leading to a pre-tax income of $222 million. Annual EPS of $3.74, though that was down from 2019 of $6.88. The dividend was also down from $3.58 to $1.98 in 2020. I mentioned earlier that operating cash flows is what they use to fund their research and development. This chart here shows you more of that. Check it out. That number is kind of just always going up, but they say operating cash flows averaged $2.8 billion for the last 5 years and has grown 9% annually over the last 20 years. Strong operating cash flows enables Paccar to invest in growth throughout the business cycle. I also found a quick kind of overview, balance sheet and other financial data here. Strong cash position. Current assets went down a lot, but we also see current liabilities go down a lot. Total assets stayed about the same, and cash from operations went up. And also note here that they have no long-term debt. So expectations for this company. I'm still kind of wondering why Cathie Wood and the ARK gang are so super excited about this company right now. It could turn out to be really dope. It could turn out to just be a nice solid company that grows at 10% per year kind of thing. It's hard for me to say right now without doing a much deeper dive, but based on their market dominance, I think it's probably safe to say that they're going to be growing. I don't know anything, like maybe Cathie Wood knows more than I do, maybe ARK knows more than I do, but I would venture to say that these guys are going to be growing pretty solid. I would also venture to say that it's probably not going to like double the stock price in the coming months or anything like that, but it will be one of these companies that's going to be growing steadily, slowly over the years, providing that solid dividend. And if you're one of these investors that's really, really tech heavy or really into like high risk, high return type things, maybe adding a company like Paccar could add a little bit of stability, a little bit of a dividend, a little bit of safety and, you know, low risk. In the limited amount of time I've spent looking at it, it seems like really solid to be going forward, but I'm not sure it's going to be like a really ultra high growth thing. Though, if the autonomous driving and the hydrogen and the EVs eventually start to take off, it's clear that they already have the production and the dealerships, which Tesla doesn't have, and they operate in 100 countries around the world. So if they were to be able to push out this really high tech equipment, it could really change the industry quicker than Tesla would be able to, I think. So there's some initial thoughts for you for now. What do you guys think about Paccar? Are you excited about them? Are you investing in them? Have you already owned them for a long time? Looking forward to hearing your thoughts down below. Thanks guys, talk to you soon.